Charlie Munger, Warren Buffett's legendary partner who passed away in 2023, had a famous piece of advice that could change your financial life. The first $100,000 is a B***TCH, but you gotta do it. I don't care what you have to do. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on $100,000. After that, you can ease off the gas a little bit. Today, we're breaking down exactly why Munger said this, the mathematics that make it true, and how you can realistically achieve financial freedom in 2026, even if you're starting from zero. Why $100,000 is the magic number. Charlie Munger understood something most people don't. The first $100,000 is not just another milestone. It's the point where compound interest becomes your employee instead of you being Time's employee. Here's the breakthrough. When you have $100,000 invested at a conservative 10% annual return, your money generates $10,000 per year without you lifting a finger. That's 10% of the way to your next $100,000, without saving another penny. Once you reach this threshold, you're no longer just trading time for money. Your capital is working for you around the clock, even while you sleep. As Munger emphasized throughout his career, the first rule of compounding is never interrupt it unnecessarily. This is why $100,000 isn't just a number. It's the point where your wealth begins to snowball down the hill on its own momentum. Think of it like rolling a snowball down a long hill. The journey starts painfully slow, but once you build enough mass, gravity takes over and the growth becomes exponential. That's exactly what happens at $100,000. The mathematics of freedom. Let's get specific about what this means for your financial independence in 2026. Current retirement research shows that you can safely withdraw between 4% to 4.7% of your portfolio annually without running out of money over a 30-year retirement period. Here's what that looks like at different portfolio levels. With $100,000 invested, using the updated 4.7% withdrawal rate for 2026, you could safely withdraw $4,700 per year. That's about $392 per month. Not quite enough to live on, but it's passive income covering your grocery bill, utilities, or car payment forever. But here's where it gets exciting. At $500,000, that same 4.7% gives you $23,500 annually, nearly $2,000 per month in passive income. At $1 million, you're withdrawing $47,000 per year, or nearly $4,000 monthly. And at $2 million, you're looking at $94,000 annually, almost $8,000 per month in sustainable withdrawals. The key insight: getting from zero to $100,000 typically takes 8 to 10 years of aggressive saving. But getting from $100,000 to $200,000 takes only about 5 years. Then $200,000 to $400,000 happens in another 5 years. The growth accelerates exponentially because compound interest does more and more of the heavy lifting. The brutal truth about getting to $100,000. Munger didn't sugarcoat it. He called it a B***TCH for a reason. Getting to that first $100,000 requires sacrifice, discipline, and frankly, a frugal lifestyle that most people won't accept. If you're earning $60,000 annually and can save $10,000 per year without any investment returns, it would take you a full decade. That's 10 years of saying no to lifestyle inflation, expensive vacations, new cars, and keeping up with the Joneses. But here's the game changer. If you invest that $10,000 annually in a diversified portfolio earning a conservative 6% return, historically very achievable with index funds, you reach $100,000 in just under 8 years. With an 8% return, you're there in 5 years. Time and compound interest cut years off your journey. What does this actually require? Living significantly below your means. Taking public transportation instead of financing a new car. Cooking at home instead of eating out. Using coupons, shopping sales, buying secondhand. Picking up side hustles to boost your savings rate. Working overtime when available. Getting a roommate to cut housing costs. It sounds extreme because it is extreme. But Munger's point was clear. Short-term sacrifice creates long-term freedom. The question isn't whether it's hard. The question is whether financial independence is worth 7 to 10 years of intentional frugality. The 2026 strategy. Your action plan. So how do you actually execute this in 2026? Here's your step-by-step blueprint based on Munger's principles. First, calculate your current savings rate. Take your annual income and determine what percentage you're actually saving and investing. Not just putting in a savings account, but investing in assets that compound. If you're not saving at least 20%, you need to make immediate changes. Second, open a tax-advantaged account. Max out your 401k employer match if available, that's free money. Then open a Roth IRA and contribute the maximum allowed. These accounts let your money compound tax-free, accelerating your journey to $100,000. Third, invest in low-cost index funds. Munger and Buffett both recommended index funds for most investors. A simple S&P 500 index fund has historically returned about 10% annually over long periods. Don't try to pick individual stocks unless you're willing to study businesses full-time like Munger did. Fourth, automate everything. Set up automatic transfers from your paycheck directly to your investment accounts. Pay yourself first before you pay for anything else. This removes willpower from the equation. The money is invested before you can spend it. Fifth, increase your income aggressively. While you're cutting expenses, simultaneously look for ways to earn more. Ask for raises, switch jobs for higher pay, develop high-income skills, start a side business. The combination of lower spending and higher earning creates a savings rate that can get you to $100,000 in under 5 years. The compound freedom formula. Charlie Munger lived to 99 and built a $2.5 billion fortune, but his advice about that first $100,000 wasn't about becoming a billionaire. It was about understanding the mathematics of freedom. Once you have $100,000 working for you, compound interest shifts from theory to reality. Your money starts making meaningful money. Each subsequent $100,000 comes faster than the last. And suddenly, not working becomes a genuine option, not just a fantasy. The question isn't whether this works. The mathematics are ironclad. The question is, are you willing to do what it takes to get there? Because in 2026, with higher interest rates, solid stock market returns, and countless resources for learning about investing, the opportunity is clearer than ever. Get to $100,000. Then let compound interest do what it does best. That's Munger's gift to you. If today's lesson helped you think differently about money, subscribe for deeper insights from the world's best investors.